Good morning, folks. Welcome to our daily market snapshot. I'm Subhash Kumar, and here's what you need to know to start your day. Firstly, let's take a look at the market overview. First up, the FIs are bought for over 404 crores, and DIs are bought for 1,022 crores on Monday. And their net addition in options indicate a sustained positive outlook for short term. On the other hand, on a cautious outlook, VIX rose almost by 8% yesterday. Let's also have a look at how global markets performed overnight. The S&P 500, Nasdaq, Dow all closed flat for Monday. While the services PMI met expectation, the manufacturing PMI data was below expectation, which was released yesterday in the US at 7:30 approximately. This kind of paused the rally in the US markets because they're expecting more data. So crude is also stuck at a $70 range. So the market is looking for crude to rally because this indicates global demand for consumption because crude is one of the main indicator of global health. So as we head into trading, if Nifty is pointing towards a 80 to 100 points gap up, and understand the current market's main goal at this point is clearly to grab liquidity. No matter what, large institutions, investors, big funds, and even retail traders have been pouring in money into the market. This is kind of creating a self-fulfilling cycle, right? So more money flows in, stocks rise, and more people fear missing out. So they pile in too. It's a cycle that keeps feeding itself, and the market keeps pumping as a result. At this point, the market isn't driven by logic or fundamentals. It's purely running on sentiment, right? When traders are feeling positive, they buy, and when there's FOMO, they rush in. So it's like the market is constant feedback loop of euphoria. And here is the dangerous part. Many traders think they're missing out if they're not a part of this. Even another thing is, by Friday, the foreign institutional investors owned $116 billion of options and futures, on the equity indexes, and even considering the single stocks, including all the futures and options in the market is listed in NSE. They kind of bumped in their bullish bets on the index futures with over 500,000 contracts. That's the highest level since 2015. Now, on context, the global funds have plowed in about $8.5 billion to buy Indian stocks since July 1st. That's after the day when the market crashed due to the results of the election, which was pre-forecasted, with BJP not having any majority. From that day, they pumped in $8.5 billion. This is including all the stocks, small cap, micro caps, mid caps, and the large caps, right? So while this is my rough analogy, understand the FIs can inflate the prices to ensure that their derivatives holdings turn green because they have put in $116 billion, right? After all, the only objective of the institutions is to profit from the market. And what we see from this, erratic moves, it's almost clear to see that the market is driven with retail speculators in the FNO, right, whose liquidity is often used to leverage by the institution to hedge and move the markets irrationally. Since if you notice, the last 800 points move in Nifty came in just 3 to 4 hours of the last 3 weeks. And these moves were triggered only by 4 to 5 stocks during that 3 to 4 hours. So this clearly indicates this is not a broader market rally. Usually the healthy rally comes in stable waves. And you can clearly see in the chart Bloomberg, which is indicating the FNO position by the institution, especially the FPIs, since historically, right? So you can see clearly the market is driven only by speculation, and also another point to note is the market mood index, right? This basically indicates where the typical market participants are in terms of greed and fear. So uh, we are moved to greed. We are currently at about 56 levels, where 70 typically indicates extreme greed. The index measured in a this index is measured in a range of 0 to 100, and the markets usually top out when this moves to 70. And this has been correct over 92% of times, and the markets have corrected when this index touched 70. And here's a historic chart which clearly proves when the market topped and bottomed. You can now pause and have a look if required. So coming back to key economic events, today we have Reserve Bank of Australia's interest rate decision coming at 10 o'clock in the morning. And also we have the USCB consumer confidence data at 7:30 p.m. While the Reserve Bank of Australia's event may be a non-event for the markets would closely watch the outcome to take cues on if there may be any rate cuts by the RBI in the upcoming RBI meeting. Right? While the possibilities of soft landing in the US market is certain, the US markets is looking ahead for stronger data sets to further sustain any rally. And the US markets have clearly shown that, I need more data because there is a little bit of uncertainty, since the Fed cut 50 basis points. That usually happens only when there is an emergency. Right? So there is a Fed speech. The Fed chief will be speaking on this Thursday, revealing cues on the upcoming rate cuts. So the market is cautiously waiting for Thursday evening, and I believe the US market especially would consolidate. And no question about the Indian markets, because they keep going higher and higher. So sectorial highlights: Nifty, Bank, Auto, Energy, and FMCG and consumption are breaking out of their upside levels, and IT and metals are taking a back seat. So technical analysis, 26,000 was a psychological barrier. It seems to be ready to be taken out, which will open the doors for 26,500 in the coming month. On the downside, the support is at 25,850. For Bank Nifty, 54,000 looks to be a psychological support. And I'm referring only to psychological levels, since the market haven't given any opportunity or respected technical levels in the last 3 months especially. So the markets are expected to consolidate in a range and remains bullish on short term. I prefer to trade in stocks rather than index, because the index kind of moves erratically, so you cannot place safe bets on that. So auto and energy is expected to have a trending day. Trading with any tight stop loss would give decent return. So one of the quote of the day that I would like to share is, the market is a device from transferring money from impatient to the patient. This is quoted by Warren Buffett. And I guess that's it for today. So be sure to check back tomorrow for more quick insights. Don't forget to like, subscribe, and hit the notification bell. Happy trading. Cheers.